Hi, welcome to the Market Alert for Tuesday, the 31st of March 2020. So stocks bid into month end despite Americans' unprecedented cash hoarding. Well, no surprise the cash hoarding. I would be with what the banks are doing, but more on that tomorrow, and particularly the central banks. So, shall we play a game? Yeah, absolutely. Let's have a look at the markets for yesterday. We'll start off with the daily chart of the Dow. S&P will look the same. We've got 50% retracement. Yesterday the market gap lower, as we saw, managed to trade up to the 20 bar moving average that we spoke about. At the moment it's currently above it. The question is, will it remain above it? Well, given that Mnuchin's managed to get 2 trillion in funding, I would imagine that the market will try and continue to move to the upside until this runs out. And then once it runs out, we'll get another run to the downside. But yesterday, the pre-market session was trending up. Then we had a bit of a shakeout as usual into the start of the session. And speaking of which, I forgot to mention yesterday, you need to change the start times in the software to 14:30. Now the US have gone on to the daylight savings. So make sure you do this. So you can see the start of the session, the bars are quite big. We started off with some buying, was hit with selling. Then they tested the market at the 200 bar moving average. Then we got the classic retracement here. Just grab this. So from the low to the high, you can see there the 76% retracement at the previous day's close. And then the market is free to move higher. Once it got through the DP level, it was slammed back. And then it was moved higher, and then price is doing a double top before we see the market move back before in early evening, and then back up before the close there to make a new high that we haven't seen for a while, as you'll see here in the daily chart, coming back to the 20 bar moving average just before the close. Absolutely perfect and well engineered. In the weekly chart, price is heading back towards the 38% retracement there, currently back above the low that we see here back in January of 19. So managing to get back to sort of a year high there for the market, or last year's price is what I meant. And let's have a look at the implied volatility. Well, this dropping sharply as well. I'm just going to zoom in so you can see this first. Back to the 20 bar moving average as well, which is interesting. The froth coming out of the options at the moment. And again, always a chance for another move to the upside, i.e. price is moving down and the implied volatility moving higher. But like I say, at the moment, the markets are flush with cash. Again, thanks to the Munchkin having extracted I think it's either 2.5 or 2 trillion. I think it was 2.5, but then they managed to grab 2 trillion. So yeah, until that runs out, we'll see if prices can close above the 20 bar moving average. If they close below here, then all well and good. And that will take us off the red in this view of implied volatility to amber, which this one really, I suppose, should be. So we're starting to see a bit of amber as far as this is concerned, and also prices above the 20 bar moving average will change this to green. But we'll see if that happens in tomorrow's alert. Meanwhile, Treasuries, this is the 3-month against the 10-year. You can see they're still to the upside. Just waiting for that blue bar to appear. As we see, these are recessions where they've occurred. Got the inversion of the yield curve, and then we get a bit of a rally, as you can see here, and then we get the recession, same pattern all the way through. Very, very reliable. And even without the coronavirus, this is where we were heading in May and June of this year. Deutsche Bank, we're not seeing this for a while, so let's just have a look and see where we are. We've been down to the lows, as you can see here. The market's managed to spike off, but heading back there at the moment. Keep an eye on the 390 level. If you break 390, it's over for Deutsche Bank, according to Charles Nenner, the cycle analyst, as he pointed out back in August. If Deutsche Bank broke 640, then we would see problems with Deutsche Bank, and we got down to 647, and then eventually we did break it, and they've managed to bring it back at the moment. So again, we'll keep a close eye on this one going forward. Yesterday I mentioned in the alert we would look at crude oil, and you can see here on the Brent spot that we are down in the lows. We came down to this low in 2016, and then prices managed to rally back up to $80 a barrel. Whether they will this time or not, given the fact that most of the world is in lockdown, I very much doubt it. But the low is down in 2002, so what you see on the news, sometimes you have to take with a pinch of salt. 1867 is the low, and that's what we're looking for there, is to see if this low is going to be broken. So we'll see, but it'll be make a great trade back to the long side once. I can't say things will get back to normal, because normal I don't think will exist for a very long time. But as everybody is released from lockdown and they start moving around a bit more, if allowed, of course, and filling up their cars, and industry starts to try and get back to some sort of pre-coronavirus manufacturing or whatever, then you will see a pull on the crude oil price. So it could be a good trade there. So that's why I'm looking at this. I like extremes in the markets, whether it's silver and also crude oil. Nothing you can't beat to these long-term charts for spotting trading opportunities. So let's see what the Dow does today. Overnight prices are moving higher, as you can see there. Moving back to the upside. They've just come back down to the 200 bar moving average area and holding at the moment. So let's see if they can breach yesterday's high, which will take them back above the 20 bar moving average in the daily chart. Any news out today that would be of interest? Only consumer confidence. This is out at 3 p.m. And you can see that's been downgraded heavily, which you'd expect because nobody's out shopping. Okay, that's it for this one. If there is anything else, I will let you know throughout the day. But otherwise, as ever, thanks for watching. See you in the next one.